Hey, it's H here, and on today's video we're checking out a Elliott wave trading strategy. This trading strategy relies on an impulse wave structure that you should be able to identify before going forward on this video. I got a video series about Elliott wave basics, so if you want to learn more about that, there's a link in the description below. Now this trade setup goes something like this. First, you look for a chart that has 5 waves up and 3 waves down. As this 5 waves is happening, you can already put a fib retracement starting from the start of this wave 1 to the end of the wave 1. As the corrective wave structure is happening, you can start looking for the targets for the entry. I use 0.382, 0.5 and 0.618. This would give me an average entry of 0.5 if all these position sizes are same. Now you would put your stop loss just below the start of this wave structure, below this wave 1. Why? Because wave 2 cannot go past wave 1 in impulse wave. Now where would we target this? Is around here. Let's take this out and let me show you. Of course the wave 3 is usually targeted with a 1.618. This gives us 33% of gain or 11.38 of loss, giving us 2.92 of risk to reward. Now this risk to reward is not too bad, but this stop loss seems quite big, so you would need to cut in your position size or do that correctly if you want to enter here. But as Elliott wave is fractal, you can do this on a smaller time frame as well. You can go on a smaller time frame and look again for the 5 waves up, and once you think this is the top, you can start looking for the 3 waves of correction and have the fibs pulled here and have your trading setup down here. Now again I have the 382, 0.5 and 0.618 as my entries, giving me my average at the 0.5, stop loss below the start of this 5 wave move, and the target is the same target as with the higher time frame target, giving us almost the same percentage with a really low risk compared to the other one. Now the risk to reward is 11.26, which is massively better than this other one. Again, if you would like to go on an even smaller time frame, you could do the same here, after here. So you could just go for the 5 waves here, 3 waves back, and have this entry set up right here. But that is the basic setup. If you don't want to take profit here, you can also play the game with trading stop loss, but without an automated one, because Elliott wave has these pullbacks and you need to identify the pullbacks in the markets. So I would manually move your stop loss as the trade and wave count continues to form. For the short side setup, it's the exact same. So you would look for 5 waves, 3 waves back, and have your fibs set up like this. Have your entries at 0.382, 0.5 and 0.618, giving us this entry here, stop loss around there, like so. And again, then you would go for, I would never take this kind of risk, so you would just go into a smaller time frame, and if you can find the 5 waves structure with the 3 waves back, you can have the same trade set up here. with way smaller risk. Why is that doing that? With way better risk to reward. I'm going to do another video on position sizing and risk management, but I think that is going to do it for this video. Thanks for watching, and hope you learned something.